Hi, thanks so much for tuning in. You're watching BQPrime. My name is Alex Matthew, and this is an earnings conversation. Now, we've seen a host of IT results over the past few weeks, and you could say that it's a bit of a mixed bag. A few analysts have called 2023 a transitional year for the IT sector here in India after the pandemic boom that you saw. Let's see what the management of Sonata Software has to say. We're joined by Jagannathan Chakravarthi, who is the Chief Financial Officer of Sonata Software. Mr. Chakravarthi, thank you so much for taking the time. Could you break down the numbers in the first quarter for us? And then we'll delve into a little bit of the details. You've still managed to have large deal wins, so I think that would be one of the headlines.
We had three large deals in this quarter. From the quarter two of last year, we have about 9 large deal wins. It includes a mega deal of 160 million also, which we announced last quarter. So this quarter, if you see quarter on quarter, the dollar revenue has grown by 17.5%. On constant currency basis, 17.4%. Our base business has grown by about 4% quarter on quarter, which is like it's at one of the top performing revenue growth in this quarter, considering the strain and stress in the market. And we have also explained that this quarter we had a salary increase, which had about 60 basis point impact on our EBITDA margin. And also we have done investment of 1.6% of EBITDA towards the newer technologies, including AI and Microsoft Fabric. We have also, because of the large deal, 3 large deals are having a transition now, which will be going on for till the end of this year. So we have invested about 150 basis point on the large deal where the transition is happening. So overall, the performance have been very, very strong in the revenue growth and very, very stable on the margin trend.
Okay. So thanks so much for that headline introduction. And you admitted yourself in the answer that you just gave me that there is stress out there because there are some of your peers that are stating that while there are deals in the offing, execution is not to the mark where you would hope. What is the kind of experience that you're seeing in the market? Because seemingly you're moving at a steady state.
Yeah. What is happening in the market is there is good and there is also stress. So both are happening at the same time. If you take high tech as a vertical, we are having some delays. There are delays in closing of the deals, and there are some cuts. There are some pause in the investment that is coming in, because there are 3 elements in a high tech vertical. One is they are managing the surplus capacity what they have built over the COVID year. Second, they are also now exploring the options of AI. What is the implication of AI for them, and how they are going forward with the AI. The third element is the VC investments have come down for them wherever the projects are VC funded projects are there. So all the 3 have resulted in high tech being a little slow in this state. There are other verticals which are having opportunities. There are some delays, but overall the market has still good opportunities, and we are well placed to exploit the current situation, and then we are able to produce a industry-leading growth for this quarter also.
Okay. Could you take us through the contours of the mega deal that you announced? What is the kind of recognition of revenue that will take place in the remainder of the quarters? And also, it's a multi-year deal. So how is this going to work?
Yep. This deal has a 3 tracks of transition happening in this. This is about 160 million over 10 years. The 3 tracks of transition will happen in the first year. So what the best of the accounting standards are saying is the transition has to be recognized separately, and that's what we are doing now. And the steady state, whenever it starts happening on the steady state, it will be spread over the remaining period of the contract. So the initial years, the cost, because we are having a mix of people transition, no additional investment. We are bringing people, putting in people in on-site. Many of this has a large cost portion of it, and the revenue portion is going to catch up in the later part of this year. towards the end of this year, the revenue will catch up with the investments what we are doing. This at present the project is not having any loss kind of a situation. Only the margin is lesser at this current situation, because the cost is more than the revenue. But later part of the from the next year, when the steady state starts, the margin will slowly catch up to reach the company's margin level. Overall, this project is going to company's margin level is what we are expecting from this contract.
So,
All these other two large deals also has a transition, so there are some costs involved on this, which is slightly higher than the of the revenue which we get from them. Hence, the margin is little stretched.
so when you say the company's margin level, you're talking about the IT services business, and you're talking about 21-22% or thereabouts, right?
Yeah. That is whatever we have promised is medium term, we will be at the low 20s level of EBITDA margin without other income and forex. This quarter, we have reported 21.1%. Over a period of time, there can be plus or minus, because we are also investing in the newer technology. We have invested about 160 bps. The investment will continue to happen in the coming quarters, and it will be from 150 bps to 200 bps of investment can happen. It can vary from quarter to quarter. And this investment and the medium term, what we expect is when we reach the $500 million, our margin EBITDA without other income and forex will be between 21 to 22.
So $500 million, this is only for the IT services business. And when you say medium term, what are we talking about, sir?
This is by FY26, end of FY26, we will get into a $500 million run rate. That's a target we have given.
Okay. For a complete novice who's looking at your business and somebody who glances through your presentation, there's a sense that you get that the international business is the fast leg of growth. Your domestic business is your steady state. Your profit driver is your international business. Now, if you're talking about heading into 26, as you pointed out, $500 million revenue from your international business, moving to your low 20s of margin, this is going to be the way that the business expands as well. And I see also, if you can delve a little deeper so that somebody who's not familiar with your business understands how this is going to go. And also, I see that BFSI seems to be quite a large chunk as compared to FY23. There's, I believe, a 10 percentage point jump in the contribution to the revenue for your IT services business. How is this going to move going forward?
Okay, I will take the second question first. The BFSI and healthcare life sciences are the invested verticals for us.
Understood.
Means there were verticals like retail, manufacturing, and travel. Those were actually harvest verticals because they are already very, very strong for us. So we are going to harvest further in that. These BFSI as well as healthcare life sciences are the invest verticals for us, as mentioned by us earlier. So these verticals are because we had a quant acquisition which bring two major customers for us, one in BFSI, another in healthcare and life sciences. So these two verticals have grown compared to last quarter because this includes acquisition also. Coming back to the margin profile of this company, the company will continue to grow faster in the IT services business in the top 25% of the industry levels of growth. Always we will maintain, but that will also bring some investments required for this. So this margin is going to be at the lower 20s, means 21, broadly between 21 to 22 is what we expect in the medium term on the margin frame. On our domestic business is basically a low margin kind of a business, but with a high volume. They have been steadily doing this business, and the business has utilized a lesser amount of working capital. Hence, their ROCE has been very, very strong. So the demand situation in India can moderate because it has grown very, very fast in the last 2 years. Can moderate, but it is very stable and continue to perform well in our domestic market.
Okay, fantastic. I'm glad that you gave us that clarification, or gave me that clarification. I'm speaking to you for the first time. So if I look at your investor presentation and I look at the kind of profile of your clients as well, I'm seeing a very large contribution by the top 10. Is that at all a concentration risk, or do you think that this is comfortable?
Yeah, we had concentration risk earlier, so we are taking steps to expand more logos, which are very large. So we are trying to bring in by acquiring Quant. We got two large logos which are come into the top five for us. We will keep focusing on large deals and the large logos, which will help us to reduce the risk in the coming days. It will take another 2 years for us to complete, to reach a reasonable level of risk management in this case. However, the risk on customer concentration or the impact of that will continue to be there. We will take all measures to expand the new logos and continue to get the large deals, which will help us to manage the risk to as much as possible.
I believe the first leg of your journey that you have mapped is to that $500 million revenue for the IT services business. But you've also talked about moving towards 1.5 billion. I'm just curious about how you're going to achieve this in terms of organic versus inorganic, because you've not been averse to having inorganic growth in the past, and you're sitting on a reasonably strong cash position as well. So how are you going to achieve that?
Yeah. So what is that we have said is the domestic business will be $1 billion business and the international business will be $500 million business in the next 3 years time frame. We are very open to M&A as a strategy. We are open, but we are not desperate. What we are going to do is we will keep looking for opportunity which are in the best of the position. If we get a good asset, a good opportunity in the M&A side, we will definitely be open to it. We are not risk averse. However, we are not desperate. Means we will not do something for the sake of doing it. And we are very, very cautious. The governance around investment as well as for the M&A is very strong. So we are carefully treading the line, and we are not going to do something for the sake of doing or something for the sake of getting a volume or for the size. We have assumed that we are going to have organic growth and we will continue to invest for the organic growth. However, we are always open for the opportunity that come to us.
Couple more points. One on the workforce. I believe you've had a net addition in this quarter as well. What is the outlook for the year? Because I think, again, here, some of your peers are being a little cautious in terms of the fact that they're letting that attrition remove a little bit of the excesses that built up in the system. What is your expectation on the workforce this year?
Okay. So the opportunity, as I mentioned to you, the market is having both opportunity as well as the stress in the market. Both coexist, and it depends on the vertical. Particularly, high-tech vertical is a little slow compared to the other vertical. So what we are doing is we continue to focus on the growth, and we will continue to have a outlook on that. However, it's not going to be something new or something dramatic, something different. What we are going to do now, do from what we have been doing in the last few quarters, we will continue to have it. Apart from it, there is a performance management system, and the performance management system will continue to be effectively working on it. We will, however, the total of all these things is that we are focusing on growth, and we will continue to do what we have been doing in the last few quarters. Nothing differently we are doing it for the sake of growth. The number of people additions and other things depends on the business requirement. We will, whatever is a business required, we will accordingly act on that.
Having said that, where is attrition level right now, sir?
Attrition level is improved a lot. We are around 12% attrition level for the last 2 quarters. It has been consistently good. We do maintain a good record with people.
Fantastic. Okay. Now to close out, could you give me a sense in terms of the initial feelers that you're getting in terms of the pipeline that could build? You've already won big deals, which, as you said, will be measured or will play out over the course of the remainder of the financial year. But what's the pipeline looking like?
Pipeline has been very strong. We have started announcing the pipeline now, and the pipeline is about 1.2 times bill to book to bill now, which is about $93 million of pipeline. This we have moderated for the large deals actually, because large deals, if I include the full value of the large deal, it may look very obnoxious for the numbers what it comes out. So we have moderated for that to the revenue levels what we are going to get from them. This at present the pipeline is very, very strong compared to what it is last year. particularly the quality of pipeline has been very good. Last year, the cloud and data pipeline was around 15%. This year, the cloud and data is about 40%. We have moved the needle on the cloud and data focus, and that has resulted in a very good pipeline for us.
So some people are calling this a transitional year for IT. Would you say that it's not? It's business as usual for Sonata Software?
This is in a transitional for Sonata Software also in a way that this gives a lot of opportunity for players like us.
Okay, interesting.
So this kind of a situation brings in sometimes when the market is stressed overall, a new player emerges. We want to be that, and we are very confident we will be one of the new player who's emerging in this space.
All right, Mr. Jagannathan, we'll touch base with you at the end of the current quarter as well to see how things are panning out. But thank you so much for taking the time and for speaking to us.
Thank you.
Right, viewers, there you have it. The IT sector as a whole, of course, it's like I said, it's a mixed bag, but then you have quite a bit of confidence being shown by the management of Sonata Software. Do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.